Good afternoon, people. Uh, it is one of the most important part of our business, and the reason why we are in the business, and very well said by Anish. So we have a great panel over here, and I'll request the panelists to kind of take 2 minutes and introduce themselves and what businesses they come from, a bit about their business. Then we can probably proceed with a few more insightful and probing questions. Yeah, so Soumya, start from there.
Hi, my name is Som. I represent a brand called Hummel. It's a 100-year-old brand, but in India, as Sir rightly said, we are a COVID child, so we just started up during COVID. So for India and Southeast Asia, we've just started our journey, and we are into team sports. In fact, we were one of the earliest brands to invent the kitted boots like this, spikes and all. So tons of legacy, but a lot of new battles over here to fight.
Hi, good afternoon. I'm Charat. I head a brand called Indian Terrain, men's clothing brand. 22 years old, started in 2000. We're based out of Chennai, but we sell all India. We sell through multiple channels, and we serve customers who are looking for style and not fashion.
Hello, everyone. I'm Arun. I work as CFO for Reliance Retail, fashion and lifestyle business.
Hi, I'm Deepak Agarwal, represent Kazo Brands. I'm a founder and managing director for Kazo Brands, and we have 3 brands under the umbrella. Of course, Kazo is the main one, and then we just launched KZ07, that's more towards utility and athleisure, and then Details by Kazo, that's accessories. Thanks.
Hello friends, I'm Anupam Bansal. I represent a brand called Liberty Shoes, primarily into manufacturing and retailing of footwear. We make about 40,000 pairs every day, and we have about a network of 400 stores, multi-brand stores, and online presence.
Hi everyone, I'm Raghav Agarwal. I'm the director at V-Bazaar Retail. We're a similar concept like Vishal and V-Mart. So we have chain of stores span India, predominantly in UP and Bihar. About 90 stores. We cater to the fashion needs and the home merchandise needs of the hinterland.
Good afternoon, everyone. My name is Rahul Bhalla. I'm the co-founder of Latin Quarters. We're a women's wear brand. We've been around for about 16 years, and we have a presence of 300 stores across 100 cities in India. Thank you.
Well, thank you so much, and we move on to our first point over here. Anupam, I would like to know, as a listed entity, what are the challenges that you face when you have to juggle between growth and profitability? You know, every quarter you have your own challenges that you have to face. So how do you manage this?
So definitely listed companies are strength. It keeps you on toes all the time, and it is important for a brand to focus jointly between growth and profitability. It is not that you can give priority to either. As a traditional company, profit is always a focus, and to keep sustenance, growth is always what you need. It is little unlike us that we will only focus on growth and not really focus on profit. So I think both of them to coexist is really, really important. And if profitability is there, definitely your listed company or any of the family is always satisfied.
So has it ever happened that you have to choose between one and not the other? So if it is the case, where would you kind of go towards?
So it's, like I said before, it's not really the choice. We have to grow profitably is, I think I would like to put it across. So it is not, we can never compromise profit over growth. While we need to constantly keep on growing, expanding, and as a core business, we continue to do so. So from a 4-pair day to 50,000 pairs a day is a journey which we have really enjoyed. And I think growth and profitability grow hand in hand. And most of the money invested, beyond a point, needs to have ROI, and I think it is important to keep on delivering ROI as it is required, and without profits, it will never be possible to deliver ROI.
Moving on to Charat. Charat, as a leader, and your company also is a listed one, so how do you find yourself if you have a classic conflict between protecting the values of the brand versus prioritizing the profits and the growth of the organization? I mean, how do you kind of balance in these whole areas?
So I think fundamentally, whether you're listed or not, I think as you have some other stakeholders, if not investors in large number. And therefore, one should always have the view that whether you're listed or private, that you have some stakeholder, you're answerable to somebody for the money that they have invested. It's a question of who has invested the money. What I have noticed is investors look for three things. One is consistency. So it doesn't matter, it's not either growth or profitability. Yes, all businesses in the real world like we run, offline businesses, we do put profitability at the center of everything that we do. But in retail, if you're not growing consistently, profits won't come. They will get stagnant at some point in time because costs will escalate. The question is, how do you do both? How can you continue to keep growing at a steady pace? And the pace is something that you as an organization can define. That's what we do. So I have been challenged in the past where you have to take decisions on, I spoke in the morning about it, of having to take tough decisions to say, let go of certain things because they may take a very long gestation period. And maybe the need of the hour now is to conserve and be more profitable. So those kind of questions have to be dealt with. It's not like the investor is asking for it, but as a business leader, you yourself need to take those calls. And we have taken this many a time. We have taken the view that we need to look at the short to medium term to stabilize, create the profits, and then drive the next wave of growth. In that journey, one thing that I have tried to use as a philosophy is what I call harvest and invest, which is identify where you're really strong, where can you generate all your cash from, and harvest that as much as you can. Keep investing there to keep growing that more and more, because that's the pool of money that you're going to get out of, which will help you to take decisions on growth for some uncharted territories and where you can go. And then do that in a measure that one can take. Absorb as much as you are willing to take as a risk, but keep your focus on profitability at all points in time, because without the profits, you won't be able to grow to what you want to grow to.
Great. So Maya, so you have a very unique brand, Hummel, and this is your 100th year of existence. How have you managed to kind of look at India as a market, and how do you kind of position yourself in the segment, which is a very exciting one, at the same time very exacting one as well? So are there any key decisions you have taken to kind of differentiate yourself in India?
Yeah, one of the key decisions we took was, as you said, that we were born during COVID, so we decided not to burn money. All right, like we had tons of imported shipments coming in, and we had to first pay customs to clear it, then store it, and then hope to sell it, like in a traditional school of thoughts by opening up stores or like finding out partners. We called up the strategic team members one day at the office, not even an office. I think it was outside because office was closed, and we said, "See, guys, this is not how we can actually survive." So we said, "Okay, let's not import it. We will take custom bonded warehouse. We'll get the shipments. We'll make it stay there. We'll not pay customs duty." And we will try to open up Southeast Asia market, which was probably 5 years down the line, which, in our original scheme of things, because India market was closed for us. And that's how I think we survived spending a lot of money and hoping to do business rather than actually taking an initiative and doing a business and then, taking some hard calls also in the way of closing down our stores because it was not making any sense for us at that time, having, the OPEX and all without actually getting any revenue. And now when you come down to positioning and all, I think we never want to be in the zone where probably the big boys are there of sports. I'm even afraid to name out them at times. So I think we're a challenger brand and we need to have that challenger spirit. Hummel, if the word is actually means bumblebee, right? It's a German word. Bumblebee shouldn't be able to fly because it has a very, very big body mass and very small wing. If it was educated like us, everyone would have told you that your aerodynamics is wrong. You would not be able to fly. The good point was the Bumblebee wanted to fly, and so it flies. That's how we have survived for 100 odd years, and we are going to survive and keep moving on. So positioning, I think, keeps on changing. There are tons of brands who have complicated it at times. For us, profit is right in the center of it. Our team members, our customers are very, very close to our heart. And anything else, how the market positions us, it's the market speculation. We can't, control that simply.
Thank you. Coming to you, Arun. A lot of people would love to know what your thoughts are on how do you balance and juggle between profitability and growth. And it's a very different case for you coming from Reliance Retail. So if you could share your experience and your advice to the audience here.
So growth up to a certain point could be mandatory. Beyond that, growth is a choice. Whereas profitability from the initial stage itself is going to be a mandate. So how do you do this? In my mind, these are not mutually exclusive. It's not that you chase one and then you lose out the other. That's not the case. You need growth. Probably you could be happy with the kind of growth that you are getting, so long as it's helping you manage your costs, such that you're able to add to your profitability. And if you are satisfied with that, and that's what your aspiration is, there is no harm. That's fine. So that's why I said, growth is more a choice you make, whereas profitability is a mandate. Now, why do you want to grow beyond what you choose to grow? That's because you see a larger opportunity that's existing. And you see that by getting behind that opportunity, you are actually able to build scale, which would future-proof your business and would probably take care of your profitability beyond 5, 10, 15 years. So I think the profitability mandate gets a lot of emphasis when you try to put a plan, a growth plan, which is like beyond 5, 10 years. But it's not a mandate again, it's a choice. So I think the fundamental aspect of any brand or a format would be, at whatever level that one chooses to operate, you need to have economic profits. So if you are not profitable when you are at 100 crores, you can never be profitable when you are at 50,000 crores. So you should make the same percentage profits at every scale that you choose to operate, and thereafter you try to build that scale as to how do you get better on profitability or be at the same level, but at the same time you are able to grow. So that's a choice, whereas this is a mandate. So these are not mutually exclusive. These are two different things.
Thank you. Moving on to Raghav. Raghav, you come from a similar business background and consumer base, value retail. How is it different for you from a Reliance Retail, especially given the fact that you are very sector specific, very geography led? So how is it different, and how do you kind of look at these two subjects? Are they, as everybody's put, that they are not mutually exclusive, or you would choose one over the other?
Well, I mean, as Arunji mentioned, right? I mean, profitability and growth can definitely go hand in hand, and it all comes down to the unit economics. We operate in a brick and mortar concept, so for us, we have to be very standardized on the costs. We need to be ensuring that we bring the best efficiencies on whatever money is spent. And for that, it's a very simple model, right? From store opening, location finalizing, from the capex point of view, from the inventory value point of view. It's a very, model that you want to ensure that the unit economics fit well. And once you get that nerve correct, once you get the whole economics right, it's just replicating the models, right? It's just adding more stores, it's just adding on to the growth. So with that, definitely you need some level of cost predictability and sales predictability. So once you're optimized on your costs and there is some sales predictability that you do for your forecasting months, this definitely comes out to be a profitable model. And likely agreed, you can't have if there's no profits with a 100 crore venture, there's no point chasing growth unless you fix the profitability part first.
Of course. Deepak, your experience with Kazo, coming from a brand standpoint, how is it different for you, and what have you done things differently, and how has been the progress for you?
Hi. Well, I think when you connected with the profitability and what is my experience with Gazo and all, so it's actually, I think a lot depends upon the plan. What exactly is your plan? Which direction you want to go? As I think everybody is talking about what is the mandate, right? Like Arun said rightly, the mandate is growth or profitability, and of course, end of the day, it is profitability, what we're all working for, right? So I think it's a lot about the plan, what exactly, because probably during the course when we started the brand, we never had profitability as a point. We never had it. The idea was to create a brand, just talk about brand. It should be accepted in the market. We should be able to give an experience. We should be able to show what is Gazo and how India can create brands in India, which looks international. So that was the whole idea. So we were not focusing on profit initially, though that was not a very good idea, but okay, that was it. So then we realized, okay, this is not the way we can survive. But okay, a few years later, then we said, okay, fine. Now the focus is profit. So actually, we actually did it like that. So I made ensure that everybody's office computer screens are set to be focus profit. And that is what we did that whole year. Then we just spoke about how can we make money in each store. And then we turned the things around. We, of course, shut down few stores, which was not making sense, the business sense. And then, of course, the whole thing turns around to be going into the right model. And when I think in retail, especially when the model is set right, and then it's like a snowball. Then you can just keep growing because the model is set right. You just have to keep controlling things here and then and tweak your plan and have a very clear path of growth that, okay, you have to grow with profitability. So that is for sure. When the plan is according to that, okay, you have to grow profitably, then you're for sure looking into the profitability part first, then the growth. So you're ensuring it. Whatever growth you're bringing in on the table, it has to be backed up by a profit. It should not be just growth. So what I would think is that it's all about your plan. And if you're following the plan very clearly, and if you're making mistakes and you know what mistakes have you made and where is the problem, then of course you can identify that and you can for sure fix it right to gain the profitability. So bottom line is definitely the most important part, but you need to make sure that it's attached to the growth. So that's what it is. Thank you.
Rahul, from a perspective of Latin quarters, you're a promoter, and I think for a promoter, everything ends and starts with profits. Internationally, this category that you serve is a very large one. How do you see this business in India, and how do you see it from a perspective of growth and also profits, especially women Western wear?
So for us, the journey has been slightly different because we're a bootstrap company. Profitability was very important to us, and our 16 years of existence, I think the first 2 years in 2020 has been the only year where we haven't been profitable. I think being profitable has helped us grow. We have been able to put the money back into the business and grow the business, give the consumer what they want, expand stores, expand product offerings. And like for some people, growth is obviously more important, but it depends on where you are in the journey of your brand and how you vision it. For us, this worked better. Being profitable from beginning helped us to get better people, to expand better. And being in the fashion business, there's a lot of risk. I mean, every business is risky, but in the fashion business, we have to take risk. We have to challenge ourselves to keep on experimenting. So that's a double-edged sword, I guess. You want to kind of challenge your team to experiment enough so that even if they fail sometimes, at least you know you're on the right track. So yeah, I guess that's for us.
So offline we were discussing, and Charat, you did mention a very important and a very peculiar thought. The DNA of the entrepreneur. You know, how different is the DNA of the entrepreneur, especially of entrepreneurs who are pursuing offline business versus the online business? And does that kind of really make a difference to the end business and the end objective?
Well, I think to be honest, to answer that DNA of finance growth versus profitability conundrum, should have a lot of startups to ask them, then those entrepreneurs, how they think. But I think if I just, as a person who has been in the offline business for a long time, and when I observe, when we read about these every day, I do find that there is a DNA strand in their thought, which is let's drive growth, let's drive scale. They push themselves to any extent. Maybe, and there's nothing right or wrong about it, but in the offline world, all of us as entrepreneurs, or businessmen or founders, etc., we tend to hold a large part of the equity and things with us, and we are very cagey about letting it go in step by step. Whereas young entrepreneurs today don't worry about that. They worry about building business for scale. So maybe there is an element out there which we can take from and learn. But there is a fundamental difference, I believe, Sanjay, in that those businesses generally tend to be eventually a winner-takes-all business. So there may be 3 or 4 in every category or every new idea, but eventually 1 or 2 will survive and will become very, very large. So that equation works differently. The risks and rewards are very, very different out there. And maybe that, because of the nature of that game that is being played, the mandate and the push and the DNA thought process is growth first, and eventually once you get that scale, everything else will fall in place. Whereas as offline retailers, where there's a very large market and each one is catering to different parts of India or different parts, keeping ourselves, because we know there's a space for all of us, growing profitably becomes very core to the way we approach businesses. That's how we have all grown. So yeah, actually it is in the DNA of all our entrepreneurs in the offline world to put profits before anything else, because somewhere we think it's our capital that is going into the business, it's our risk in the business. Whereas actually it is the risk of everybody who has put in the money in the business, whether it's a private equity fund or if you're a listed entity like Anupam sir and mine. It is a lot of people's expectations are riding on it. But that is the only thing that I would think as we as leaders can take away and say, maybe talk to them and say, how do they think so differently? What element of that can we bring into our organizations in terms of velocity drive to push that growth? Whereas how do we retain that profitability mindset in doing that? That has to come from the way we have grown our businesses.
So Arun, you're a finance professional and from Reliance. So obviously market share is a very important lever for you, I'm sure. But what's your view for players who are not as large as you? How would you advise them to move as far as looking at the market is concerned? Which are the levers that you would like them to employ to kind of work on these 2 metrics?
So India is a market or a country which is full of opportunities. So definitely all of us have experienced it in some form or other. So what I think small businesses or the businesses that are aspiring to grow should do is, they should keep looking at areas where they can sort of get the edge, grow, look at those opportunities which are available today or which will become available tomorrow and pursue that. It's very easy to be contented about where you are today, given that you've got your model right and you're making decent profits. But you are not future-proofing your business if you are not thinking that this business would never get challenged. So I think in the interest of making sure that you survive, your business survives in the longer run, you need to look at certain things which are outside your comfort zone. You need to look at opportunities which are sort of related to you, but you're not pursuing because you feel that would create a dent on your profitability, or that's not where your core competence would lie. So I think one has to keep looking at what are those extra additions that I can make to my business. There are opportunities. This is the next 20 years is going to be for India in terms of what we would see in terms of consumption growth, private consumption. We would see a lot of these spends happening from the consumer side. So I think this is the right time. One should look at those opportunities and don't let it go, because there is always an advantage of being an early mover. What is becoming available today at a certain model certain cost structure, you would not get it after 2 years. Maybe you would get it at a higher cost with 3 competitors. So I think it's very important to pursue that. I think every one of us should think as to where that opportunity is lying around the peripheries of our own business.
Mr. Bansal, with a lot of increased competition in your space, and I do agree that you have a very large business and presence as far as India is concerned in footwear. How do you see this market evolving, and how are you taking note of the competition which is kind of evolving over there? And what are the steps you are taking to kind of, insulate your business and your brands from the evolving competition?
So being in competitive world is always healthy, and it keeps us on toes and to keep on innovating things. At the same time, I would say the market opportunity is huge, and India is such a large country. The bent of consumption would be so large. If you look at Indian context, the consumption on an average is below 2 pairs in a year. And if you look at the international markets, people consume about 5 to 6 pairs every year. And most of the market till today is unbranded, and I think consumer sentiments are moving very fast towards the branded segment. So I think from opportunity standpoint, in next 25 to 30 years, there's a huge opportunity as far as footwear is concerned. And competition is kind of engaging the consumer. It is expanding the market size. It is creating opportunity. Gone are those days when people had one shoes which they would wear for everything. And I think footwear has evolved as a great fashion accessory. People like to change shoes like apparel, and I think it's a great opportunity. And as a brand, I would like to be in multiple segments. That's why we have different brands to talk to consumer. I think Leap 7X, which is our new brand, which got launched, which is athleisure category with 2 new brand ambassadors. We have Healers, which is focused on comfort as a segment, which is huge in India. There's a separate brand for school shoes called Prefect, and many more. So I think the opportunity in footwear segment is huge. We need to keep on focusing on, I would say, product and the communication and connect to the customer. And I think that would be the winning edge. While keeping track on competition is very important. India is a huge country. I think people have different aspirations. Somebody's looking at value, somebody's looking at premiumness. So I think you need to get the focus of each brand right and connect to the customer. And I think that'll be the winning formula.
Raghav, you are addressing a very specific geography as of now. I'm sure your consumers and the demand that the customers have are very aligned with those markets. If tomorrow you had to grow beyond these geographies, how would you look at the customer's need and the demands that is putting across to you? Would you kind of have a similar offering for your consumers, say, in some other geographies, or you plan to stay limited to the geographies that you are currently serving?
I mean, see, India, with a 150 crore population, right, we're very culturally diverse, and definitely by every state and every city, there is a different change in consumer spending pattern. So definitely with expanding into different states or different localities, our assortment would change, our product offering would change, but the core business model would definitely remain the same, right, which is value for money. So offering that value to the customer in that same quality that, the probably good brands offer, and offering that to the customers in a lower price. So that business model stays the same, the business goal stays the same, but definitely the assortment would change, the product offering would change. And with that, the ways of operating also changes, right? I mean, you see business models like Decathlon. The way they operate internationally and the way they operate in India is completely different, right? So with change in location, your business practice changes, your product offering changes, but of course, the core stays the same.
Raghav, yes, Rahul, we were speaking about how fashion business is a craft and not necessarily a science or an art. You would like to elaborate on the same?
Yeah, sure. So I think fashion business cannot be run on spreadsheets. Having said that, it's not something you really have to create from scratch. I think it's a craft. You need to understand the pulse of the consumer. You need to be willing to take risk. You need to be willing to innovate, yet sticking to your core. And I guess that's the advantage of being in the fashion business, is that it scares a lot of people because you can't predict everything based on spreadsheets. You can't predict what colors, because everything changes every season. So it's a good place to be in, because once you get the hang of it, you have an advantage over the guy next to you, and it's a long process. It's not something which we learned overnight. We did our mistakes, but over our long journey, we have understood that irrespective, like Raghav was mentioning, irrespective where you are in the region, your DNA remains the same. You may change your assortment, you may change the colors, the sizes, but what sells for us generally, our best-selling styles are the same across India, and our styles which don't sell are the same across India. In fact, a very interesting part of our business which we've learned over the years is that even during end of season sale, our highest volume and value comes from non-discounted merchandise. So we feel consumers are not really looking at just value and just discount. They want a better product now.
Soumya, so you said that you have a very different pricing strategy over here compared to your parent country. What were the points which kind of allowed the organization to shift its strategy so dramatically for a country like India, and kind of how did you manage to convince your people over there?
Good negotiation skills, perhaps, but on a serious note, I think it took us a lot of market visits, actually going and meeting the consumers, trying to understand, what they're buying. And that's not only in India. You go to Malaysia, you go to Singapore, extremely different markets. You go to Indonesia, completely different market. So, the one thing that we agreed, first thing that we agreed is that we need to have a local sourcing. When I say local sourcing, that the European sizes would not fit here over here. So neither the color schemes. So we had to first agree on that. So I think it was step by step. Once we started moving the sourcing over here, then came the pricing discussions. So we did a lot of focus group with consumers, customers who had actually bought from us, and we had a very genuine discussion with them that okay, what will make you buy more from us, what will make you probably not buy from us, and something like that. Very, very open discussions. We had tons of time during COVID, so we could do a lot of those things. So I think very okay, genuine feedback came to us that okay, I'll buy probably one piece from you at this price, and then I'll probably not come back for another year or so. And we then asked ourselves that do we want that? No, we want the customer to come back. We don't want the customer to feel that coming to Hummel is like a pricey discussion. We want them to be, confident of coming down to our store or our online stores, marketplaces, or our distributor stores. That okay, I buy a good price product. This is great. This does my job. There's a lot of technical expertise that has gone into it. There's certain credibility, but also it's not putting a hole into my pocket. And if we have to do business in India and Southeast Asia, we have to do it like that. We cannot suddenly come back and say that okay, we have this pricing that works over there, and you have to buy it at this price, and or else you leave. They will leave, right? So we didn't want the customers to leave us. So I think that's the very core of it.
Very interesting, yeah. Deepak, again, offline we were discussing about passion really pushing entrepreneurs into many things. And that's one of the most the strongest driving force for a lot of entrepreneurs and brands. So what's your view, whether passion is an enabler or a hindrance to profit and growth?
Well, I think passion could be something to start with, to push you to be where you want to go, right? So it's, and I think it is very much connected to the fashion business. Fashion business is, I think you cannot create brands across unless and until you are passionate about the brand. Of course, you can create huge businesses, even if you're not a passionate, but you're a good core business guy, and you can create a great business, right? But I think if you want to create a fashion brand, you need to be passionate as well as have to be a great business guy. So it has to be a very, very strong combination, because if you are not looking into the brand perspective from the passion, I think it's very difficult to go there, to go and say and stand and say, okay, we stand out, we are a brand, right? Because it's an experience. It's about how you look at the brand, and it maybe you have to compromise with the profitability. You might have to compromise with the graph where you have to reach there, because of course any business starting up has to end up with the profitability, right? But it's a graph where you see the scale, where you see the things have to come up to that level where it has to start making money, right? But because you have to be into that passion of creating the brand to go to that level. So I think passion is definitely one of the core part if it's connected to any fashion business.
Absolutely. Sharad, one for you over here. As a leader of a business, you would be having a situation where cost optimization becomes very critical for you. But also in my case, I've experienced sometimes that you basically run yourself down to the bone, while you optimize costs. What are the other levers that you can kind of employ to grow the business, whether it's on profits or revenues, and not really look at starving the business for many, many critical things? Like one of the first sacrifices any business does is the marcom budget. And that is a huge hit in the long run, which we don't realize. It's a slow killer. So what's your view, and how do you kind of work things around it?
Completely agree. I think marketing in every budget for every company is considered as an expense and not as an investment. So somewhere I think if everybody looks at it as a capital expenditure, not an operating expenditure, then the whole thing. So also if accountants can change their standards to allow marketing to be treated over a longer term, then the investments will happen into that business, right? But having said that, I think you're right. The easiest thing to cut tends to be the thing that builds it for the longest period of time. My input is that in the long run, it's very detrimental. Therefore, this balance between profitability and growth, when it comes to the crunch, the decision that one should take is to look at saying, okay, if I can only spend so much, and if I feel that I can only spend so much, then where do I want to win? So if you choose your markets and say, I would like to win here, and I think I want to make it large and meaningful here, then one should invest there completely and wholeheartedly for as long as one can, so that at least you're growing your business and you're growing it well, and you're investing behind it. The challenge is if you start spreading it too thin, then you will have to keep cutting, and when you cut, you end up cutting even the strongest part of your businesses, and which is what sets us back a long way. So it's a trade-off between investing for the long run as well as investing for the short run. But marketing budgets are the ones who will always take the hit first in most companies. But it takes a lot of courage. And I have to say that many a time I have chopped budgets because I don't see value coming out of it if it is not going to yield in the long run, knowing fully well that it might hamper 3 years down the line.
So Arun, there was a smile on your face when this question came up. Do you have a very different view on this from a financial standpoint?
No, I think the two important pillars, am I audible? The two important pillars for any business would be one, the product, the other, the customer. So I think any idea gains light only if these two pillars are clearly established. Now, what is marketing? Marketing is the way you communicate about your product to your customer. Now, that can't be something that you would chop off because you see a problem elsewhere. Of course, there are times when you see that, like what Charat mentioned, you don't see an immediate need for that connect to be made stronger than what it is today. That's when, as a CEO, you make a decision to go a little slow on that. So it's not chopping, it's going a little slow on that. But if you are not faring well in the market because you have not been able to establish that connect, then in times when you have a crisis, you should put more money into marketing. So I am not somebody who would say that you should cut your marketing budgets because you are seeing a problem that's hitting you. You need to understand what that problem is. Most of the times, if that problem is because of disconnect, not working well, you have a great product. Now you have to talk to your customers about your product. Now, why will you decide to cut your marketing budget at that point of time? Because there is a good story that you want to present, and once you present that story, you're going to get the returns. So I think the story has to be heard in full. The story has to be told in full. If you have done your homework when it comes to your product and when it comes to your customers, I don't see any merit in cutting the marketing budget because you need to make that connection happen.
So, guys, we have 5 minutes left. If there are any questions from the audience, it'll be interesting to hear them. Because we have a very interesting panel over here and deep insights could be get. Anyone with questions?
So, like Harshit here from Arvind Fashions. So when you see new D2C brands or new like disruptions which the brands are creating, so the well-established brands, how do they see on the DNA of growth and profitability? How do you decide? Like how you mentioned on Liberty shoes, like footwear as a category. So like when there's a disruption going on, what do you choose between growth and profitability for you to not lose out the market share?
This question is directed to Mr. Bansal.
To the panel.
So definitely we need to keep track on new entrants, whether on D2C or I would say online or offline. At the same time, we need to be cautious not to keep on responding to each and every competition activity, because if some online comes and they start burning money, so sometimes you let them burn. And you don't need to kind of react onto it and take learning from each and every competition. So I think we need to be mindful to identify who's my relevant competition, what's their growth story, what is the real problem they are solving, and only react to where you really need to react to. Learn from the consumer behavior, but do not follow the rat race if you are not really convinced about it.
Thank you. So I think, Anish, it's a wrap from our end. Yeah. Thank you. Thank you so much. Thank you, panel.